What's up, traders? It's your boy Ace Boogie coming to you live and direct. Want to go over a trade I took a couple of days ago, EXPR. So for this particular trade, I traded the bounce short setup. And a quick overview of the bounce short setup is you want to trade the bounce short setup when the short setup is initially missed on the first red day move on the big runner. So this was the big runner, and you missed this big first red day. That's cool. So you want to wait for it to bounce and have a first green day. And once it has that first green day, you're not really convicted that it's going to get back up to the highs. You have a bearish outlook on it, then you want to short after that first green day. So we want to basically wait for that first green day bounce momentum to slow or reverse before entering. So this is the first green day, and on the second green day morning, that pre-market time, that momentum slowed and started to reverse. And that's when I got short. You want to either look to enter on a failed morning spike or a sideways price action that breaks down or any other type of weakness that confirms that, the stock is not going to spike and is more downside imminent. Of course, you never want to go in full size when you're shorting. You want to wait for confirmation of the backside of the move once again. And always know that there is big downside potential when swing trading this, holding it for multiple days or overnight at least. But always respect your risk and always move your risk down as the trade unfolds. So here's the daily chart, but let's get into the meat and potatoes with the intraday. All right, so EXPR. So as you can see, this one had a nice run up. Um, After hours with all the other Wall Street bet meme stocks. This was a original with GameStop, AMC, KOSS, all of those. So once GameStop started breaking out and bouncing, all of those started following typical sympathy play. But that next morning, all of those stocks started to crash. And I chose EXPR out of the bunch just because EXPR is it was a weaker move, or it started to unwind initially, and it had a weaker bounce than all of the rest. And all of the rest were more known, they were more renowned. Everyone knows GameStop, everyone knows AMC, a lot of traders know KOSS. EXPR was the baby brother of the bunch. So I always like to go after the weakest link because it makes for the easier trade. So, but basically, all the Wall Street bets, meme stocks had the same price action. So when the sector leader started began to fall, I knew EXPR was going to follow shortly afterwards. So I got short after it halted. They actually had a nice up move off of support. Shooter bounced from the 340s all the way up to $4. A nice little 15% move in like 5 minutes. But then it got halted when GameStop started to sell off as well. Um, and what I did was I waited for it to unhold, bounce up, and put in the top. And then once it cracked on the VWAP, or it was looking like it was going to crack on the VWAP again, I got short in this area right here. Yeah, which is decent. I probably could have waited a little bit more. I was actually waiting for a bounce back to 375. I got impatient and jumped the entry, so I probably should have had a better average, maybe in the 375, 380 area, because I was looking for those 380s to crack. Sorry, I can't even talk today. Looking for those 380s to crack or to pop up, but it was just taking a while, and I was impatient. I jumped my entry, so that's a mistake on my end. But ended up having like a 362 average out of the sales that I did have, and I was just able to really key in on this pattern by staying patient. I let the price action work. I was watching the VWAP area, I was watching the 375 area as risk once it started to break down. And I knew it was going to, try to do like a midday bounce or whatever. But once this bounce failed to 375 and it shot right back down to the 340s under 350, I knew I was in, good water then. And then as you can see, it cracked down to the 330s, which was near the low of the day. 338 was a key level for me. Once it cracked down to 330s and under 330, 325 was the area to look at. So quarter dollar, half dollar, whole dollar, A. And higher day and lower days are key areas for me. But once the afternoon hit, it started to challenge the teens, and then as it closed, it was challenging, the $3 level. Of course, after hours it ended up cracking under $3 and it started going sideways. So, this one I was first thinking to cover, like, I should take some of these profits, just book it, burn a day trade. But then I said, you know what? It's probably gonna go lower tomorrow. I'll just wake up early and see where it's at, base it on that, and then decide if I want to get out then. So that's what I did. The next morning, I got up around 5 o'clock, watched it for a little bit, and went back to sleep. Then got around 6, and I saw that it cracked down to the 280s, and 275 was holding. There was a big offer on the bid, um, or it was a big buyer on the bid. So I just went ahead and covered up because it seemed like a lot of these stocks were potentially getting ready to go green again. And I didn't want to have those problems. So as you can see, it did bounce up, went green. I probably would have covered into the red green move up here if I didn't cover down here. So likely wouldn't have held it through the market open back down to these lows. But it was a nice trade all in all. I took the meat of the move. I think I bagged about 22%. Let me see. Yep, 22%. And it was a solid trade idea off a solid pattern. So want to definitely be keying in on the patterns that work and that are predictable and repeatable, like these bounce short trades. So if you have any questions, hit me up in chat. Ace Boogie 2488. I'm out. Peace.